me stand my desk up. All right, guys. Well, we have to get on into it here today, very, very quickly, because I do have a this time serious hard stop before the 8 o'clock. Literally, yesterday I logged in right as they were introducing me. Not a good look. I can't keep doing that. So I do have a hard stop today. I have another speaking engagement right after this. I am going to bring up our stocks. Thought it would be here. Ah, here we go. Sunday session stocks. Okay. We'll have that. We'll have a few things that we'll cover here today, some quick housekeeping items and things like that. But before I begin, got to have the disclaimer up. For those of you in here, I'm not acting in my capacity as a licensed financial professional. Simply here to show you opportunity. What you do with that opportunity is all up to you, as well as you got to be aware of any and all risk, understand that risk, be willing to accept that risk and take on that risk. And any trades I show here today, if you decide to take those trades, just know they are of and on your own volition here. This is me. Everybody in here, you guys know me, yes or no? Do you know me, yes or no? Let's see, just making sure if you don't know me, shame on y'all. Love it, love it, love it. Great, good. So I don't need to run through all of my credentials. I will say I am finally done. I finished phase, I'll call that phase like 2 of my dissertation, of my doctorate program. All of my classes are done. I successfully passed the pre-proposal defense. Now it just has to be, the 125 pages of writing I got to get done next. So, but we're going to be there soon, one of these days. All right. And let me go ahead and just prep y'all, right? I'm going to do some neuro linguistic programming and get you guys to drink to plan on this. Let me just give you guys a little quick breakdown of what I'm studying. What I'm actually studying is how I'm proposing that financial literacy. I want to propose a new definition within financial literacy on investment literacy, because financial literacy can be making change, it can be balancing your checkbook, all of those things. What I am doing is one, I want to look at how financial investment literacy impacts a change in net worth. Then I want to test also diversification, how right now, one of the things I feel is a common thing and a common thing that I see constantly is over diversification. And I'll actually show you this. This is actually a client of mine's what part of their account, of their personal assets that they are holding. There are literally 256 stocks that they own less than 10 shares of. Right? This is so much diversification that they don't lose money, but they don't make money. The only person making money in this situation is their advisor, or was their advisor. And that was a big problem for me, right? And then the last thing I wanted to study is how account type selection will affect somebody's net worth. And that's all derived. Both of those things are derived or will change the relationship of net worth with financial investment literacy. So I plan to add to the definition, so people will have to quote me a lot. And I also plan to build a simulation, so to teach people financial literacy, and a course. So I'm gonna need about 200 to 400 participants. I'm gonna need y'all for maybe an hour and a half. So I'm just planting it in your head. Next year, just prepare to do this for me, all right? To do this for me. So just prepare to do that for me. Okay, everybody agree to that? Yes or no? Can Kezia, thank you so much. Sharon, thank you. Love it. Love it. Because you guys are my target audience because you're trading, you're investing, and that's what I'm so that's my big focus and my big contribution to the world of finance and economics. And we will see. I'll tell you, there's usually not experiments done in the world of finance. It's usually just like post review and theory testing and stuff. Now, quick housekeeping item, Discord. I'm going to share out the Discord channel here right now, just in case. If you're not a member of Discord, please go ahead and join. And I sent that to myself. I didn't even send it to y'all. Go ahead and join Discord. We have people posting trades, posting comments, posting, we're getting a lot more in with our Discord channel, and I'm loving the interaction. So I want to make sure you guys are interacting with us. Post anything that you want to post, ask questions. You can even DM me. I think it's all turned on now. Every week I have to turn it back on, but it should be on again. So I look forward to communicating with y'all through Discord. And we're going to be even more active sooner and sooner. Okay. Gary, you get in it. It's free. You literally click the link and that's it. You're free. This one is free. All right. So all you got to do is click that link that I just sent, and then you are in there. As the old country saying goes, in there like hair in a biscuit. Okay. Then the other is we are not going to have a Sunday session next week. All right. You're not going to have a Sunday session next week. I'm going to be out of town. Traveling in New York City. And I'm debating on the 28th. Because there's just not going to be that much movement, So we'll think about that. I'll let you guys know though that week if we have it or not, but more than likely we'll have it. So let's get into some fundamental announcements this week. On December the 16th, we have new housing starts. The 17th, we have retail sales numbers coming out. And then the 18th, jobless claims. And the 19th, we have options expiration. This is going to be a big week because this is like end of year expiration, end of quarter expiration, end of it all expiration. Okay. So, let's see. So just make sure that you guys are aware of that. If you want to screenshot this, type in done when you got it screenshotted. Want to screenshot this, type in done when you have it screenshotted. And if you're not going to screenshot it, just type in done. Beautiful. Thank you, thank you, thank you. All right. So now we have earnings coming up this week. We have Lennar, we have Micron, General Mills, we have Nike, Cintas, FedEx, Accenture, and Paychex, and Carnival Cruise Lines. I was like, CCL. What is that? Carnival Cruise Lines, all coming up this week. And this is it for earnings. So screenshot that and type in done when you got it done. Beautiful. Fantastic. And feel free to share it out on the Discord channel. Feel free to, do whatever you'd like to do with this information. All right. Next, we're gonna hit the live market. We're gonna definitely talk about our Batman stocks as well. So don't forget about those, right? Our Broadcom, Apple, Tesla, Microsoft, Meta, Amazon, Alphabet, and Nvidia. We're going to look at Micron. We're going to look at a few others. Are there any stocks that you guys want to make sure that we hit here today? I saw UNH and PPTA. Those are absolutely on the list, right? Those are on the list right now. Let's see. AVGO. Okay. Let me see here. LIN. Diamonds, UEC, SKYT. Is that Skynet? That's bringing the Terminator. I don't want to find him. Okay. Taiwan Semiconductor, NVIDIA, NVDA, uh, Deck, the Halls. No. Oh, let me plug this in. I need my keyboard to last. I think it's about time for a new keyboard. I'm not saying this thing dies a lot, but it dies a lot. Palantir, PLTR, MU, Melly, Celsius. Ugh. I drank one of those one time, and I swear to you, I could see the damn future. Okay. That was my heart was beating so hard. No, somebody else wrote Celsius. Somebody else wrote Celsius. Um, Priyanka, CoreWeave. Yeah, that stuff is way too like, oh my goodness. And let's look at, we're gonna look at Oracle as well, because there's some really there was an amazing breakdown of something that is happening in Oracle. That's just really, really interesting. So the other thing is I'm gonna be referencing something brand new. This is something that I am working on. Yeah, this is something that I'm working on for you guys, and I just am going to give you guys like a quick, sneak peek at it. It's going to be, I'm looking at it. I'm partnering with a company on this. There is a data cost around it, so if I'm trying to get the cost down for anybody that may want access to this. It's not out yet. You can't buy it yet. It's not for sale yet. So don't ask for it yet. I'll let you know. But what this is one, it's a scanner. It'll help me find I can use it to scan through COT data, seasonality, economic heat maps, and it will scan all of those and help me find the best stocks to trade. Or I can use it and say, hey, SPX on the SPX, right? Should I be bullish or should I be bearish? Well, it's telling me to be bullish, right? On SPX, no neutrality, no bearishness yet, right? If I want to look at top setups, I can look at top setups as well on certain assets, right? This isn't every stock or anything yet, but I hadn't started with that. I hadn't like kind of programmed that, but I just kind of wanted to hit some of the bigger things to help us, and then scatter plots and economic calendars and data screeners and heat maps and scanners. There's so many different tools built within this that it's pretty amazing. And so we'll consult it from time to time. We'll take a look at this and we will see whether or not we love it or not. I also like that I can get curated news specifically for specific specific things, like if I only wanted to see Bitcoin news, right? It'll help me find Bitcoin news, and same for anything else. So we will take a look at that as well. Let's see. And I thought, one second here. And okay, perfect. So let's get back to our charts. So first, let's take a look at Lulu. Lulu, quite a great trade. The first entry point, I looked back and looked at what we were when I first discussed it, because I entered in that day and I had bought at 166.24 was that the day that I bought that trade, which was that Monday. I bought 166.24. Monday, November 17th is when I bought this. And we closed out at 205.66. I closed about half of my position, and I'm going to add to that position to go for our bigger target that we know that we're after in Lululemon of 324. Did anybody take that trade? Yes or no? Anybody take that trade? Yes or no? I know I had one person close out early on me. And so not a lot of see. Look, I'm telling you, this ain't a hobby, folks. This ain't a hobby for me. All right. This isn't just because I like to do it. There's some rhyme and reason when I look into things. But we are what's great about this is that, and I'm going to move this over here. Even if we look, like we are higher, we are closed right at this level of resistance right here. Okay, so I'm expecting our next entry to be around 188.06. And if I get another entry at 188.06, I am perfectly happy holding that to 329. Okay, I am perfectly happy and holding that to 329. Now, this is that area, right? So trade one was phenomenal, 166 to 205. So I'm just going to put this over here. Trade one. We'll go 166 to 205. And then trade. We're looking for our next trade. We want to buy at 188.40. We'll even go 188.50. That just sounds better. 188.50. And we're just going to wait. This has now been downgraded to a wait. And we are 12.14. All right. Let's take a look at UNH. UNH. Now, United Healthcare, let me add on my hedge fund trender. EMAs here. We did get a blue dot buy on Thursday, the 11th. We're up to 341.84 right now from Thursday the 11th. This was, a fine area for a pullback. After we filled this gap here, we finally had that pullback on a short term. Let's see. We have a D extension right down at 272.85. So we do have a dividend here with this. We have, earnings are not until I think like January 27th. January 27th. I personally think that we may see this push up and just kind of capitulate right in here, right? Until earnings, and then we'll get a movement one way or the other. I do anticipate this to still remain bullish as we've hit this first D extension here. We have our pullback down here to this blue area. So our next target on the way to our ultimate target is right here at 582. Our current next target is $397 is where we're looking from where we are today. So from 341 to 397. Now, the only thing I want to see happen here, which it actually already did, didn't it? Let's see. The high here was 343.17. And the high here, 344.98. The close, 341.84. So we have closed higher than this previous high, than the close of this previous candle here. So we are making uptrend type movements. We go down to like a 4-hour time frame. And look at this. You can see that you're making higher highs and higher lows. Market energy is showing us that we may see a pullback here. Our subswing here is to there and to there. So that will be filled. A little pullback, 336 to 358. But we will see ultimately. This is again one that like I'm holding on to. Like it's not something that I want to be in forever, but I'm okay if I'm in this for a year or so and ride it from 270 to 582. That's where I'm going to be looking for 270 to 582. Um, let's see. Did you see Fib Mastery entry single? What's wrong with this wrong time? Paul, what do you mean? Oh, I don't know what that's from. That's not from me. That is not from me. I don't know what that was. So this again is more of a long-term hold here. So that's UNH. Let's take a look at PPTA. Palantir. Well, would you look at that? Our Palantir, PPTA, the same guy behind Palantir. We rallied up. We called the D extension at $30.19. We are still holding to that D extension. We got a blue dot buy. This thing is still shooting up. This is still in the buy zone, still in the buy zone. Nothing to, in my opinion, to worry too much about this. If you are looking to take some profit, feel free, my friends. What I will say to do is move your limit up to like, let's say even 27, right? If you're ready to take some profit and you're like, hey, I don't want to be in this for a while, yes, I understand who's behind the stock, but who knows what this is going to do. Look, move it up to 27 and just hold on for that. Let's take a quick look at OKLO. We talked about this last week. We saw the bullish movement. We said, hey, we're probably going to get a little bit of pullback. We got the pullback where we exactly like we thought. We will more than likely see another buying opportunity. And my goal is 136. That's my target on this, on 136 there. SMR, very similar story. Just wait for that next bullish movement. And that's what we're going to be looking for. NVIDIA, very similar. We're still holding on to that. This is going to be one of those that I look to take to 200 or so. Walmart recovered nicely after its listing on the, I think it was like Monday or Tuesday of this week. It was Monday of last week. Sorry. It went from the NYSE to the NASDAQ, had a bearish day and then recovered like we knew it would. Let's now go here. Zoom, SMR, Amazon. Amazon has been interesting, but they still, if this is our new low, which we haven't seen it move off of that low yet, it could be, then we could see this thing begin to rally up here again in Amazon. More than likely bearish movement moving in for a little bit. We'll see what happens with Amazon this week, but I do think we may finish this year bearish on Amazon. Something else I want to look at is NVIDIA. We're going to take a look at this really quickly. So before I jump into that, I want to talk a little bit about like market structure. How many of you are familiar with the patterns of a Head and Shoulders? Type in a yes if you've seen those. You know what I'm talking about. Yeah, a lot of people are, right? Well, a Head and Shoulders, there's another type of pattern out there that is very similar to a Head and Shoulders, but it differs in one major way, and that's called a king's crown. How many of you know what a king's crown is? Yes or no? Okay, good. Fixin' to learn you. So a king's crown pattern is illustrated as such. You have your left tip of the crown, your center tip of the crown. Now, what's differing is that this center tip, you expect it to break what would be known as the neckline. Then on the right tip, you could either have a equal right tip, a high right tip, or a shy right tip. And I'm just going to draw it equal-ish for this purpose. And then once this right tip is completed, you are to expect a major fall in this. Okay. You are to expect a major fall from this movement. Now, the King's Crown tool is not something that I created. It was something that a 30, 40, 50-year market veteran taught me personally when I worked for his company. He is known as like the father of Fibonacci's. He's very, very intelligent. And the King's Crown pattern was actually a pattern from a book that had been around since like the 1920s on technical analysis. Yes, it was, Claudio. And so this right here is a very important pattern. And what I'm seeing in NVIDIA is you have a left tip, center tip, right tip. Now, how do you know how far down the movement goes? Well, you go from your center tip wick. Okay. So let me do this. Your center tip wick down to the base of your center tip, or the base of your right tip. So we broke the neckline there. Here was our base. This is our right tip. We're looking to go down to 143. Can I just tell you that would spell a massive drop in this? Now, I was I don't know if I'm allowed to say where I got this info from. I don't know if the person wants me to tell you or not. So I'm just going to say a very, 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 very prominent mentor of mine who manages not billions, but like probably near $1 trillion for a large bank. He and I were talking, and he shared this with me from one of his desks. And basically, this tear sheet says, 2 companies that have never turned a profit just signed the largest technology contract in human history. Oracle's credit default swaps hit 141 basis points this week, the highest credit default swaps since the Lehman Brothers collapse in 2008. Trading volume exploded to 9.2 billion in 10 weeks versus 410 million last year. The credit markets are screaming what equity markets refuse to hear. Here's what they say. See, Oracle committed $300 billion over 5 years to build AI infrastructure for OpenAI. OpenAI's current revenue is $13 billion. The contract requires $60 billion annually starting in 2027. OpenAI must grow revenue 5-fold in 2 years just to pay one vendor. Oracle's free cash flow turned negative $10 billion last quarter. Barclays has already warned that cash could be exhausted by November of 2026. Morgan Stanley explicitly recommends buying protection against Oracle's debt. But here is the part that should be worrisome. NVIDIA invests in OpenAI. OpenAI uses the money to buy NVIDIA chips through Oracle. Oracle uses the payments to service the debt and buy more NVIDIA chips. Revenue flows back to NVIDIA. The serpent eats its own tail. SoftBank sits at the center with $113 billion in commitments and only $58 billion in funding capacity, a $54.5 billion hole that must be filled. So, meanwhile, MIT found 95% of organizations see zero return on investment from generative AI. McKinsey just reported that 8 in 10 companies show no bottom line impact. The entire structure depends on AI adoption materializing at an unprecedented scale within 36 months. If it does not, the failure cascades everywhere simultaneously. And there's no government bailout coming. The White House confirmed it this month. So I say all that to say, don't stop investing in NVIDIA if you don't want to. Don't stop investing in Oracle. Don't stop investing in any of those things. Because I always look at analysts a lot like weathermen. They use a lot of great information, but sometimes they're just wrong, right? Like we all know that. So here's how I would proceed. If I were you, and let's say I was still had my NVIDIA shares, okay? What I would do right this minute is I would look at, what in the world? Go back to NVIDIA. I would look and say, all right, where are my levels of support and resistance? Well, there is a level of support. You guys can see that. Here is, if that level of support breaks, there's my next level of support. If that level of support breaks, where's my next? Well, I need to go left, right about down here. And then I have my next one right in there at that 143.20 mark. And then there and right in here and so on and so forth. I would say, okay, self, I am going to put a stop loss in place. If I owned NVIDIA at $100, I'm putting my stop loss at 153. I may sell half my shares. I may sell all my shares at that point in time and give it $20 worth of movement to the south before I get out. Because what I don't want it to do is go from 175 to 110 and been one of those idiots that we hear about all the time that said, man, if only I would have gotten out here. I had it all the way up to here and I knew I should have got out. Well, if you knew you should have got out, then why didn't you do it? Right? Medicine prescribed but not taken will do the body no good. Let me repeat that. Medicine prescribed but not taken will do the body no good. So all I'm saying is that protect yourself a little bit from this, insulate yourself, and don't make the mistakes that people made in 2000, in 1933, in 1929, in 1981, in 2000, in 2001, in 2008, and in 2020. Smart is he who learns from their own mistakes, but wise is he who learns from the mistakes of others. So what I do is I would look to lock in for those stop losses there. So that's on NVIDIA. I want to go Oracle, ORCL. And Oracle, as you can see, right, they've gone from 344 down to 189. There are people that have lost millions. right? Lost millions here. And the gap to be filled is 179. I've talked about that gap at 179 with people. There's a gap at 141. There's a gap at 128. And if we get back into where it would be is right about $100 is where it's been forever. Right? Think about losing what going from $300 to $100 in this stock, all because you were too afraid to put in a stop loss. Now I think this gets back up to 220. Where it goes from there, time will tell. But what I don't want it to do, what I don't want time to do is to tell you, hey, you're broke now because you didn't follow along, right? So could it go down to 137.39? Yes. What I would do again is I would say, hey, I don't want to take that ride down there. I want to stop it at 158. If it hits 158, I'm out. Or if it hits 178, I'm out. Whatever you want to do. Okay. If the government takes a stake in it, like Cisco, again, and let me ask this, like, right, I've heard both sides of this debate. I don't know if I have an opinion on it yet. What are y'all's thoughts on the government owning publicly traded companies and having directive rights in those companies? I am okay. So I see the first look, I see a lot of people like me. Okay, good. I see a lot of I'm not a fan either, right? Not a fan either. Good. Okay. I am very much against it too. I feel I feel a lot like you do. There's some companies that maybe like, I don't really know if I want the same people that making cigarettes making mac and cheese. That's what we got with Philip Morris and Kraft, right? That's where I think we need to have a little intervention around here. But sorry, but exactly, Scott. So, and exactly, Dennis, I'm right there with you. So, again, I just don't know if I like it. I don't know, but we do know that it does push up wood pulp and the grated cheese. Amen. Neil, I have nothing against it, right? I have nothing against it. But it is, it's just one of those things, But I'm looking at this at like Oracle. If the government does take a stance in it, then yes, it's going to move up, right? Just like Intel did. But look at what Intel has done since government intervention. Oh crap, they're going to have direction. Oh, and then the next pullback, right? Intel, look, I think Intel is going to head to 49. And I actually think the long-term play on Intel is up to like $58 or what's this, $62 where this gap is, right? And do I think it's going to get there? Yes. I do think it's going to hit 25 before I think it hits 68. I do think it's going to hit 25 before I think it hits 68. I bought it at $18 and held it until 41 and got out. I was supposed to hold it till 40. Missed my didn't even realize that my order had expired because I switched brokers and that one didn't get carried over. And so it got to 41 and I was like, all right, I'm out. And then I'm just waiting on its next pullback for me to buy in. Right. So I just wanted to share, like, that's a very good thing that you brought up there. So let's keep going here. MSTR or MST. Did anybody take the MSTY trade? Yes or no? I'm in it still. I will say that for full disclosure, I'm still in it. Good. I was in it at $7 and now I have less shares just at 35. always when you have that 10, when you have a reverse split, know that there's going to be some sort of correction, but we got a dividend that's paying us on, oh, it paid us on the 11th. Didn't even realize that. 58 cents a share. So that's pretty nice. Right, 58 cents a share. That's pretty nice to say the least. But I am looking for this to begin to rally up. Right, that next blue dot I may add to my position here. MSTR is still down right now. Why? Because of Bitcoin. But I'll say Michael Saylor came on last week onto several different news outlets. They have a 1.4 trillion dollar or 1.4 billion dollar war chest that they're just sitting on. Like, it's not like they haven't even tapped into it. So it's not the end of the world. And then there's more legislation that is freeing up the processes for cryptocurrency. And I think this is just a temporary down in Bitcoin before we see its next big hike up. Quite honestly, I think there's, something to it, this next big move. And I think we get back to 100,000 in Bitcoin. We get back to 100,000 in the first quarter of next year. I'm going to go ahead and put that out there as my big, bold prediction, but we're making higher highs and higher lows. And I'm telling you, we're looking for that next big push back above 100,000. And then once we get back up there, I think 100 and 125 is going to be back, and MSTR and MSTY will be following suit. So if you're not in MSTR or MSTY, I would absolutely look for that. MSTW is another one. Yes, you are. I have seen that one. That's Round Hills ETF. They pay about a 24% dividend. It looks like every week. So you get, well, now it's 24 cents right now, but still down. It's at $12.43. So, all right, let's keep her going here. AVGO. Broadcom's one of those that I do like just simply because of they are a use case for they're what's called like a pass through for like AI and AI infrastructure, right? They're going to be used for AI and AI infrastructure. So I'm okay with Broadcom here. They have their dividend on the 22nd. They did beat earnings. Yes, they spiked up. They pushed back down. Maybe they come back to fill this gap at 308. And we may see some corrective movements here, right? As something, let me just say this. There is a spanner in the box that is going to cause an issue, right? A misfire, an engine failure, a tire puncture, your wing breaks, something to get in enough F1 references there. I really miss it, right? Pick and shovel AI trade. That's what I was looking for, SP. So look, I like this. I think that there is some corrective movement that needs to happen in AI. Nothing moves parabolic without recourse. And I think we're getting to that point where there may be a little bit of recourse there. There's some very interesting things coming as well. I was reading in an amazingly interesting academic article where it has been uncovered, and this is going to be like a you heard it first here news type deal. It's uncovered that they are testing, and I say companies are testing in-store dynamic pricing based on you. How many of you have heard about this? Yes or no? Okay, a few people have, a lot of no's here. Let me explain, right? I'm going to use I'll use like Best Buy as an example. Let's say Best Buy partners with OpenAI. Okay. Well, in part of those like 35,000 word user agreements for things on your cell phone that you don't realize is that your OpenAI and your Facebook and your MAC address and the app Best Buy app you downloaded or the Best Buy website you accessed that got your MAC address and showed, hey, this person is interested in this Mac keyboard. Well, they go and look at his social profile, his text messages, his all of this other information, and they say, you know what? This person looks like he is doing well. He lives close to the store. He's more than likely wants it right now. So we're going to charge him more, or we're going to charge him less because we want to build loyalty with this person and raise prices incrementally. Whereas they do it to another person and they look at him and say, well, this person doesn't have a lot of disposable income. So this is probably going to be like a one-time purchase type deal. He hasn't bought anything from us in a few years. As a matter of fact, his Amazon card is all things under this price point. So he's probably not going to buy a lot. So we're probably going to have raise the price on him because even though he doesn't have a lot of money, we're going to raise the price because we know he wants it and he's going to pay for it, but he's not going to shop a lot. And that is happening. Yes, it happened famously with Instacart, 15% differences in prices. We've seen this. We've actually seen this happen between cell phone brands. So somebody in New York, they had an Android and an Apple phone. They booked the same ride from the same location on the same ride-sharing app. The Android was cheaper than the iPhone because iPhone customers our iPhone users are seen as more affluent. Right? Airlines do it with your cookies when you're shopping around and you go back and forth to their website. But imagine because you live close to Target, Target raises the prices because they know, hey, you want it now, you'll come get it. Think about that. And imagine if now they have digital tags. So imagine as you walk down an aisle, because your phone can be tracked with the camera and your face could be too. As you walk down an aisle, the prices change on a digital tag. That's where the ultimate is. And you want to know something very interesting? There isn't a single law to prevent this right now. So there isn't a single law to prevent this right now. And it's insane that this dynamic pricing could exist. Now, I hope something would change there, but we never know, right? I'd hope something would change there, but again, we never know. So Broadcom, look, I think Broadcom is still down in a fall. I don't see it. I think Monday we get a recovery, right? If you're looking for a short-term trade, 359 back up to 390, I'm okay with, right? But I think this week we get that. However, just be on the lookout for it to establish its two to the left, two to the right high. And then we get, our next kind of movement down into the 309, 310 area, right? I'm not, that's one of those things is that forward guidance for this is very, 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 very interesting. Okay. Let me get through a few more of these because I don't want to miss y'all's time. We'll do Micron because they do have earnings coming up. I think MU is going to beat earnings. Let me just go ahead and say that. I think we're going to still see a buy here on MU. I think it's going to be a nice little pop up on MU. I'm just letting you know. But I think 276 from where we are on MU is absolutely possible with all things. However, again, you think anything moves this parabolic and doesn't pull back? Think anything moves that parabolic and doesn't pull back? Dow Jones Industrial Index, again, we've seen some, nice parabolic movement here. If we plot our fibs from this, that low back in April to now, which would be the proper way to do analysis, we still have a ways to go before 492 is where our ultimate target would be. 492.44. Okay, 492.44. Let's look at Melly. Oof. Yeah, no, there ain't nothing good about that, is there? um, I still think this is going to be headed down. As I said for weeks now. See, 1, 2. Yep, that is right. And we up there to there. And that pull there to one of these days, we will have a class on how to do fibs like this. So you guys learn. So 1848.72 is where Melly could end up. 1848.72. Don't like those missing earnings. And we're seeing a lot of people selling a lot of this stock in TLA. Anybody's got in that with me? I bought this at what, 850 something, 832 or something like that. We shot up as high as $10.05, back down to 902. I'm still looking for this to go 25 or higher. So just keep holding on that one. Let's go to CoreWeave, Google, and we'll hit a few others here. CRWV, CoreWeave. CoreWeave, I still think is a great company. This is like that, pass through economy here that is going to be a great player in this. We still have a lot of selling energy. I don't like that for that. A lot of selling energy going into CoreWeave. Okay, there to there. There. So we could see this get back up to 106.81 and then push down again. I don't know if it goes down to $17, but this is again, guys, this is that, hey, company goes public kind of deal that we see a lot, company goes public kind of deal that we see a lot with CoreWeave. So that pattern I talk about. Goes public, runs up, sell off, pull back, sell off, pull back, drops down, sits sideways for forever, and then pushes up. Okay. Google, we'll take a look at that. This is one of those, again, that hold it forever, right? Until something beats their TPU. Right, we could see this pull it back to 304. The only scary thing with Google, and this is like hey, don't let it get down to 215. Right, set yourself up with some stop losses. Maybe put a stop loss at 275, or put a stop loss at 250, or even you're one way down at 239. But have those stops in place to where, hey, I sell off half of my positions at 275. I sell off another half of my positions at 250, half of that half 250, half of that half at 239, and the rest of it at 215. And then I buy at 215. Now, at minimum, you're locking in profit and you're making money. Okay. Sharon, yes, I do believe that we're going to get probably like a 5 to 10% higher in the first half of next year. And then the second half of next year, I see some challenges on the horizon. Let's go. What else do we want to do? UEC, good old Uranium Energy Corp. This is again just probably borrowing cost to get it out of the ground. And then also, like, the other side of this is we don't actually have all the reactors on site for us to go nuclear, right? That's going to take years of development and years of red tape, and that's what it's going to take. So UEC, while it had that boom, I think it comes back to reality. So protect yourself there, right? Protect, protect, protect. That's going to be the theme for the next few months. Protect, protect, protect. Now, where you can hide out, gold and silver, copper. I mean, look, our silver trade, what has been um phenomenal, right? We ran all the way up to 58.59, and which was higher than my 56 target, and we pulled back a little bit, but I think we get two bearish days and then we get it back running, and there's 68.98 on the SLV. And if we look at silver futures ran all the way past my 61 target. We have one down day, one more day that creates our to the left, to the right opportunity there. That would be your next fib, and that's a 77.18. Okay. 77.18 there. Copper sold off with silver. Let's take a look. Copper futures, HG. I don't know why I thought HC. So in looking at this, yep, we had a big drop in copper back at $5.34, headed back to potentially 55.90 is where we see copper. And so going all the way back up there. Let's see. And Andrew, my man, hope you're doing well, buddy. Hope you and the family are doing well and getting ready for this season. Wanted to catch up with you. I don't know if you got my text or not, but want to catch up with you sometime soon. And let's do more. We'll look at Celsius and Palantir, and then I'll run. CELH. Celsius, I don't know. It's a really interesting phenomenon because it's weird. Getting into the energy drink sector is such a low barrier of entry these days. So I just don't see, like, I don't know if it's going to have its same like amazing movements like we had, but could it come back up and fill this gap to 59? Yes, absolutely it could. I don't think it's time to buy yet. We don't have the cross here. So I would wait if you are looking to buy on Celsius and just hold off on that. But it is not there. Somebody said Hyatt. We can look at Hyatt. I love Hyatts. They are best rewards program out of any hotel I've ever had. Stay in them all the time. 161.84 was our price target. Clear cut buy opportunity here. Long term 193 for Hyatt. I think that may be a little bit of an ambitious target, but I could see something in the 170s here. I could see something in the 170s. So, and with that, my friends, and first and foremost, thank all of you guys for being here today. Really appreciate it. In the coming weeks, just so you know, I'm working on a new newsletter. I'll give you guys a sneak peek here. Hold on, I'll show you the picture. It's called the Wealth Watch because I'm a big watch person. Just FYI, if you didn't know, I'm a huge watch guy. It's going to be a newsletter. It'll be called the Wealth Watch. It'll be sent out a couple of times a week, and then a trading room potentially as well coming up. So be on the alert for that. I'll be sending it via Discord and to you in here. I also included a ebook that I just wrote, the 10 most important fundamental announcements of every month, and I gave you a breakdown of them and at what direction that they move. So those will be out. Those will be free to join as always. And then look, if I end up using this Edge Finder tool and I really like this thing and I end up offering it to you, I'll let you know, but it needs some more rigorous testing. Okay. Tom, that is coming. It'll be just an email newsletter that you'll be able to sign up with. I'll be sending it out. I'll be sharing the link in the webinar, in the Sunday sessions, and in the Discord. So it's not out yet, but very soon you'll be having it. And again, guys, just to remind you, no session next week. I will be traveling, so no session next week. So thank you all. Have a good one, and I will see you in a webinar very, very soon, folks. Thank you so much. And have a happy holiday with you and your family.